Hi, I'm Steve Finn, and I want to give you some tips today if you're looking at selling your business and you've still got a loan on that business, or you might have some equipment finance or something like that. So here's how it actually works, and here's some tips around some of the different scenarios that might actually affect you. So when you sell the business, you've got the chunk that you owe the bank. Basically, hopefully you sell the business for more than that. When the buyer pays you, it goes into your solicitor or your settlement agent's trust account. They'll then disperse funds, and part of that will be that they'll then give that chunk of money to your bank to pay them out, and then whatever's left then goes to you. That's how that works. Sometimes you might be in a situation where you actually owe more on the business than what you sell the business for. So if that's the case, look, it's a real challenge, because when you sell the business, it's generally only going to sell for what it's worth for in the open market. Unfortunately, there are cases where people may have bought a business, and then now the business, when they sell, it's not going to sell for the same amount, or it's going to sell for less than what they might have paid for it, or what it cost them to set it up. So in those cases, basically what you've got to do is, if you've decided that you are going to sell, what you've got to do is you've just got to say, okay, well, it is what it is. And whatever we get, say you owe 500,000 on the business, if you're going to get 300,000, you get that 300, you pay it off, you're left with a balance of 200, and you've really just got to now move on to the next venture, and then just sort of say, we'll took one or two steps backward, now we've got to move forward and try to catch that up if we can. That's just really how it is. If you're in a situation where you've got some equipment finance, for example, in your business, generally what will happen is, for some parts of that finance, it might be worth actually just paying it out, and the new owner will take over and they'll refinance that equipment themselves however they want to. But in some cases, you might be on, like, say, a rental lease or something of some equipment, and the payout might be prohibitive, or they're just going to finance it the same way anyway. So in that case, what will happen is, normally it can be like an assignment. They still need to do their own loan application. You'll end your loan with that provider. But basically what the provider will do is, effectively they'll shift the loan that's there and the weekly or monthly financial repayments across from you, across to the buyer, person who's buying the business. So that's pretty much sort of how it works. So if you owe some money on the business you look at selling, it's fine, it's all part of what's normal. Probably most of the people who we deal with do have a loan on their business. It's just a matter of how you then decide to deal with it.